What's up, guys? Welcome back to Today I Learned Bitcoin. This show, we teach you Bitcoin topics. We're going to have guests on to walk through some things. And today, we have an awesome topic following up on our last episode where we talked a lot with our co host Jason about inflation, money printing, free money, and all the craziness surrounding that. Today, we're going to cover Bitcoin, what we're all here for, right? So we're taking you back down the rabbit hole with us to cover why Bitcoin is so important, why it's a solution to these crazy inflation problems we've been talking about, and why Bitcoin is different from every single thing in crypto. Let's go ahead and bring on Jason. I'm going to pull him up here. Say what up, Jason.
What's up, guys? Alec, great to see you again, man.
Yeah, buddy, we're here to talk about Bitcoin once again. So it's always a good day. My thoughts initially, so like just to start on the Bitcoin not crypto topic, like we mentioned last episode, a lot of people, venture in kind of the altcoin crypto route first of all, right? And it takes quite a bit of education to understand exactly like why Bitcoin is different from these 20 plus thousand however many alternative coins there are out there today. And there's some very key specific reasons why Bitcoin is around today. A lot of people think Bitcoin was actually one of the first cryptos, or I guess digital forms of money, which is actually not true. It's actually just the first one that actually worked. So we're excited to talk about why it works, what are those key components, and why everything else is just, some version of a copycat that, you know, really is just created to enrich their founders. They market with a lot of buzzwords and get you excited about Web3 and all these other things going on. But in reality, they're not doing any of these things with a token. So excited to jump into that. What are your thoughts, Jason?
Yeah, man, I think where we kind of have to start with Bitcoin and again, like where it really started to click for me was the realization of, Bitcoin having all the best properties of a sound store of value, right? In that, it's scarce. In fact, it's completely scarce. It's probably the most scarce resource that we have. It can be transported at the speed of light, and it's a completely hard money. Most of it already exists. The stock to flow ratio, and maybe we can get into that later, is extremely favorable. And it's only getting more scarce, right? We have the halving coming up next year. And as we've seen with every halving, the supply gets cut in half. And that has like a very good positive effect on not only the price, but kind of what a store value should be, right?
Absolutely. Let's go and dive into this. So I've got an article here that I pulled up. It's on Medium by William Vandenberg. Awesome article, covers a lot of things, but I just pulled out a few things specifically on Bitcoin. One being the first thing being proof of work, right? You've probably heard, this floating around. There's different, they're called consensus mechanisms, right? But proof of work, as written here, is the key to unlock the solution to the double spend conundrum. So essentially, how do we verify with a digital property that, you know, everything since its inception is correct and everyone across the globe can very easily see that? Jason, you actually had a really, really great analogy for this with like a puzzle, right?
Yeah. So the way I often explain proof of work to people who, have no idea what it is, and honestly, it's an analogy I read that really made it click for me, is if you have like say a 10,000 piece jigsaw puzzle, that's incredibly hard to put together. It's very time consuming, it's energy intensive. And once the image is put together, once the puzzle is complete, you could hold that puzzle up in front of a whole crowd of people, and every single person in that crowd is going to agree, yeah, that's a complete puzzle. So it's very easy to verify. And I think that's the whole idea behind proof of work is that there are these very, very difficult, complex math equations that require tons of computational power to solve. And that's where the energy expenditure goes into play for Bitcoin. However, once it's solved, it's very easy and quick for all the nodes in the Bitcoin network to say, yeah, that looks correct. We can verify this. It looks good. We can publish this block to the blockchain.
Yeah, nailed it. I love the puzzle analogy. It just simplifies things for everybody. But yeah, proof of work is essentially so you have a computer, it's running an algorithm, it's a type of math problem, right? And they're essentially guessing numbers until they get one correct. This happens on average every 10 minutes with Bitcoin. And one of the coolest things is, computers get faster and faster and better and better. It seems like every single year. Bitcoin also is built with what's called a difficulty adjustment. So if there was some computer that was, 5 times faster than the ones we're using today called ASICs, Bitcoin would actually automatically adjust. It would realize it does this about every 2 weeks. It would realize, hey, blocks are getting mined much faster in 10 minutes. We need to actually make finding a block that much more difficult to reach that average of 10 minutes once again. It's to me, it's a work of art. Like the way Satoshi had built this out is truly amazing, and it's what secures the network, right? So there's a lot of other cryptos out there. One of the most famous, I'm sure everyone's familiar with, Ethereum. They moved to the proof of stake network, and that's the biggest differentiator between Bitcoin and really anything else out there is the strength of the network being completely decentralized and there's no trust placed anywhere. You're able to watch and validate these blocks on your own computer. If you run your own node, you can actually see and verify these blocks yourself. Where in a proof of stake mechanism, you're trusting validators. And I don't want to speak too much on this because I'm not super educated on proof of stake. But the fact of the matter is, there's always someone at the center with those. There's trust involved. With Bitcoin, it's completely open. Those with computers, those that are willing to expend energy to run those computers, have the right to mine, right? Any
And I
other
think
thoughts? Yeah,
sorry, I
you're good.
talked over you a little, but I think one of the most important aspects of this is that it removes any human bias or any room for human error, which leads to centralization, right? When you bring in a group of people, proof of stake, for example, right? When you've got a group of people and whoever's got the most Ethereum, since we're picking on Ethereum, staked into the network, has the most say and has the most influence. I mean, tell me how that's not centralized, right?
Dude, is that not what the fiat system we use today is?
I mean, it's a little
Sounds the same to me.
sexier, but that's what it is. It's it's a sexier rebranding, and so yeah, and I think to zoom out even a little more, Alec, just for those who are really really new to this, maybe we should talk about like just the very key high level makeup of the blockchain. Like, what does a block consist of? Right, it's a group of transactions within a block, and so to publish a block, which, as we know, as we covered in the last episode, that happens once every 10 minutes. We publish a block to the Bitcoin blockchain. A block is just a group of transactions, right? And it caps out at 1 megabyte or roughly, I don't know, ballpark 2,000 transactions. And that's just like, I sent Alex some Bitcoin. The network is able to verify that I had the balance to send that Bitcoin to Alec, and two, that Alec received that Bitcoin, right? And that's one transaction. And so we publish that in groups called blocks. Once that block gets published, the miner, excuse me, that publishes that block, that solves the math problem, the algorithm, if you will, the quickest, gets that block subsidy, which includes the block reward, which today is 6.5, or excuse me, 6.25 Bitcoins plus whatever transaction fees are added to that. And that's like very, very high level how it works. And that's how blocks get added to kind of this rolling ledger that we refer to as the blockchain.
Yeah, 100%. Something I had pulled up here too that I thought was super cool. So this chart is showing the hash rate. So essentially how much computational power is on the Bitcoin network. And look at that thing grow. This is a 3-year chart. It doesn't pretty much regardless of price, more and more people want to mine Bitcoin. That says something about it. The more hash rate there is, the more secure it is, the less vulnerable Bitcoin is against attack. So, try to replicate something like this. Plenty of people do, plenty of people have. Every single one has failed in comparison. This is the strongest, largest computer network on the planet. It's absolutely it's beautiful. It's a piece of art, like I said earlier. Uh, mo-
100%, man.
Moving on from proof of work, let me get this pulled back up here. Sorry. Really what it comes down to is back to Bitcoin's the value proposition, like what makes Bitcoin a good money, right? And this is applicable to any form of money. We can use comparisons like against gold, things like that. But this kind of pyramid here gives you a good idea of what makes proof of work and Bitcoin so powerful here. So at the base, you know money needs to be a great store of value. Like we mentioned earlier, Bitcoin's the best store of value ever discovered because there's a set amount. It's the discovery of digital scarcity, which has never been done before. And the fact that you can verify these things, right? There's plenty of things that are made, artwork or trading cards, sneakers, tons of things that are made in limited quantities, but there's always fakes made. And sometimes it can be hard to spot or point out a fake. Even looking at gold, how do you tell if someone's selling you a gold bar that, maybe they didn't fill it with tungsten? There's some other, I don't know the exact metal alloys that weigh, approximately the same as gold. So it it's something you can't get fooled with Bitcoin. It's just not possible. You can verify it on the network. There's no doubt about it that what you have, what Bitcoin you have is Bitcoin, right? So that I mean, any other thoughts there on the store value aspect?
No, I mean it's just it is the most scarce and finite thing that we have as a monetary asset, right? We know exactly, to touch on, some of the stuff that we covered in the previous episode. We know that there will never exist more than 21 million bitcoins ever, no matter what, no matter how bad anybody wants it. And to make it even better, the scarcity just increases over time. It's almost like deflationary, right? We know, like I mentioned before, that in a year, the block subsidy is going to reduce from the 6.25 to 3.125. And that's huge. I mean, that's literally like, if I'm going and making 100 pizzas per day to sell at a food truck, and I have, 1,000 people that want those pizzas, it removes the supply aspect from it. The only variable there is demand. And if the demand's high and I only have these 100 pizzas, people are going to start paying more and more money for that slice of pizza. And then the next day, all of a sudden, I say, you know what? I'm only making 50 pizzas from here on out. The same group is there, the same 1,000 hungry people who want my pizza. They're there. And now I'm only making 50 and I'm not making more than that. Nothing else works that way, right? If the price of gold drives up, they go produce more gold. They work harder to get more gold out of the ground. I mean, literally any other store of value works that way, and this will never work that way. The supply is 100% fixed, and that's why it's so unique, and that's the beauty of it.
Yeah, and I was just having some thoughts about our last episode. If you save your money in dollars, do you realize they don't have to go out and mine for dollars, right? They just punch in another zero in a computer. Like,
It's not even printed anymore. It's just a digital edition of a number at the end.
Now the
Yeah.
dollar, I mean, in comparison to some other currencies, the dollar's a decent store of value, right? Especially, places like Argentina, 100% inflation, things like
Yeah.
that. I'd much rather hold a dollar, but you know, it's still not something that's a store of value. That's why anyone that has a significant amount of money doesn't hold cash. They buy assets with it. They buy
Right.
Bitcoin. They buy, gold and other types of store of value assets. So,
Yeah, and
um,
there's some good ones out there. Gold is a pretty decent store of value. It's not exactly easy to go find more gold. Certainly not as easy as it is to create more dollars, but
100%.
it can still be done. The supply can be increased to meet increased demand, and that does not happen here. It
Yep.
can't.
The best store of value we've seen thus far. Moving on, just another topic here, durability, right? Things like gold are super durable, right? It's hard to destroy. Bitcoin is the hardest to destroy, right? It's been attacked how many times now? It's been banned in countries. It's, you know, bunch of FUD put out on the news, but Bitcoin keeps going. It says
Yeah,
down here, honey badger don't give a fuck. That's that's the best way to put it, honestly.
there's actually there's a website, I can't remember what it is. There's a website that tracks every obituary that has been published about Bitcoin, and it's well into the hundreds at this point. Bitcoin is dead. You see it in the news all the time. You're not going to stop seeing it, and it's just a running tally, and it's hilarious because the lows we have today, right? Kind of like I talked about on the previous episode, the low we had back in November of last year, where it dipped all the way down to $16,000. Like that's our new low. 5 years ago, that was not a low, and that's as low as it's getting now. It's not
Yeah.
dead. It's never going to be dead.
Yeah. I mean, plenty have tried to kill Bit. Look at what's going on right now, right? If you were to try to attack Bitcoin, flood it with, fake transactions and stuff, it costs money to transact on Bitcoin, right? So if you want to
Hmm.
pay the money, go ahead. You can do it. You are feeding the network. That'll incentivize more people to mine because more fees will be flowing into the network. They will make more, they will get more of a Bitcoin reward for mining these blocks that contain your transactions. So attacks just build Bitcoin. It makes Bitcoin stronger, and that's just another beautiful aspect of it is go ahead and attack it. You're just going to make the network stronger.
Yeah. Yeah, 100%. And even if, and it'll never happen, but even if somebody successfully hacked the network, guess what the reward is? Nothing. Because then the integrity of the network is gone and the value plummets to zero. So it's like it really is the perfectly designed system. It's like, yeah, you want to spend billions of dollars to somehow get the 51% attack across the line. And for those of you unfamiliar with that, it's just a reference to the fact that the majority of nodes on the network have to agree to a truth. So if a hacker could somehow pull off the computational power to the point of getting the majority of votes to agree to a hack, then the whole thing's compromised anyway. Everything collapses and goes to zero. And so it's like there's nothing to be gained from doing that.
100%. Just replace what you said nodes with miners. They would have to
Miners,
take
miners, yeah. Excuse
51%
me,
of the hash power,
the
which
hash
at this
power.
point would be impossible. First of all, there's not enough computer chips in the world. It's going to take a global coordinated effort to manufacture enough computers to take over this. Because, like I mentioned and showed on that chart, it is the largest and strongest computer network on the planet. So, good luck. Try to
All
do
this to say, it's pretty goddamn durable.
it. Yeah. Moving on to fungibility. I mean, it's just the fact that, a Bitcoin's a Bitcoin. There's no difference between, one Bitcoin and another. It talks about anonymity over here, right? There's a couple different tools. Bitcoin is an open blockchain. Everyone can, watch it with their own node, but there's different tools you can use. So if it's sent around in different ways, there's no difference between the Bitcoin I have and the Bitcoin you have, right? So pretty simple, straightforward topic there. Any thoughts before we move on to portability?
No, I mean it's kind of like if we like to compare this to gold a lot, and it happens pretty frequently. Like an ounce of gold is an ounce of gold until, like you said, you mint a gold coin that's got some other shit in there, and
An
so
carat
even
or 1
gold's,
carat.
even the fungibility there could be a little dicey, but it's never going to happen with Bitcoin.
Absolutely. I mean, talking about gold portability, right? Like this thing
Yeah.
can move across time and space, right? Try moving $10 million worth of gold. That's going to be insanely difficult, insanely expensive, not only to transport it, but to make sure it's secure so you don't get robbed. You can send $10 million over Bitcoin from your own computer, from a cell phone, if you wanted to, right? Super easy to move, send it anywhere on the planet, easy peasy.
Yeah, and in that same vein of portability, I mean, that was the problem that eventually took gold down and created the need for paper notes, right? Was that it became way, way, way too impractical to sit and carry a bunch of gold coins around to make large purchases with. And I guess this leads into medium of exchange a little bit, but it also wasn't too easily divisible either. So yeah, I mean, it had both those factors working against it. That's why we eventually saw it just consolidate into a few central banks as a reserve. And that's what birthed like the whole concept of paper notes backed by that gold.
Yep, absolutely. I mean, the top of this pyramid is where we're getting to, Bitcoin's improving on, right? Incredibly solid, best we've ever seen below medium of exchange. It is a fantastic medium of exchange. It's just a volatile one currently in the short term, right? So a medium of exchange is something that, I can give you in return for a product or service, right? It's something you can send anywhere. It can be divided up in any amount. And this is where new things become possible, like microtransactions. I can pay, you know, a fraction of a penny to do something specific. I just saw someone the other day, kind of a funny idea where you had to pay 1 Satoshi to unlock a door. Right. Little things like that, your imagination can run wild on what the possibilities are there, but the fact is, like, you can send extremely tiny amounts of value to extremely large amounts of value very simply. It can be divided any which way, and you don't need permission for anybody. There's no middleman in between this, right? It's completely peer to peer. There's no bank, there's no credit card company, there's no one siphoning additional fees, 2-3%, right? There's tiny, tiny little fees transacting on, layer two, like the Lightning Network. You know, Insanely low cost to send money anywhere in the world. And there's billions of dollars sent that way through the Lightning Network today, every single year. It's pretty amazing.
Absolutely, man. Yeah, it's awesome to see like kind of the evolution from store of value. And I would argue that we're still very much within the store of value phase, just with like the cycles we're in. I think to fully transition from a store of value to medium of exchange, there needs to kind of like the opportunity cost of spending Bitcoin needs to very much like kind of dissipate, right? I mean, we all know the story. I can't remember the guy's name ever. The dude who spent thousands of bitcoins on a couple pizzas,
Yeah.
right? Like it can be done, and the technology is awesome. It's just not smart right now. Like I wouldn't go buy a cup of coffee with any amount of Bitcoin, knowing that it's probably going to 10x, or the price is going to do something really crazy in the coming cycles. Whereas, I go drop my US dollars pretty easily, knowing that they're just going to become less valuable. So,
I mean,
but the
it
the
does
idea, you know, go ahead, Alec.
it depends how you look at it, right? I have the firm belief that Bitcoin will be going up in price forever. Like as long as the planet continues to grow, maybe we become multiplanetary, all that, Bitcoin will absorb the value of everything. So at
Yeah.
which point it's worth it to spend it, you're always, producing as long as you are, providing work, you're going to get paid for your services or products, and you can store that value back into Bitcoin. So if you spend it, simply replace it, right? I'm a huge proponent of actually using Bitcoin, transacting peer to peer. You can simply buy back. Yeah, there may be some fees and such. It's pretty negligible, but it is all in perspective. And once we reach the unit of account phase here is really where it's going to make very clear sense. The price isn't quite as volatile when you have these 80-90% swings to the upside and downside. I 100% agree where you're coming from, Jason. But as this continues to grow, it's a teeny tiny asset right now. Market cap sits at 500 billion. In comparison to gold, it's a tiny little baby. So
Yeah,
when we hit
yeah.
10 trillion, 20 trillion above that market cap, we're going to start seeing things actually priced in Bitcoin. It's going to make sense to transact in it. You can, acquire more very simply, and that's what we really have to look forward to. But Bitcoin is still in its infancy. It's been around since, first block was mined in 2009, right? So roughly 14 years. If you look at any other money, they've been around for centuries. So if we look at Bitcoin in 100 years, it's going to be the best of everything you're seeing here in this pyramid, right?
Yeah. Yeah, exactly. And at that point, once it reaches unit of account, that's when it's really become the global reserve currency, right? I mean, everything today is priced in terms of USD. No matter what country you're in, Bitcoin itself, all these other shit coins that we're talking about, it's all priced in terms of USD. And it's going to be incredibly exciting to see that things are soon going to be priced in terms of Bitcoin itself. So
Absolutely. Cool. So let's move on to decentralization. This is one of my favorite topics to cover because every one of your favorite shitcoins are going to claim to be decentralized. Guess what? They're not.
they're not.
Like, I don't care if there's thousands of people able to run the software. It's similar to Bitcoin, right? Like I have a node sitting on my desk. I'm running the software. You can claim that's decentralized, but every single altcoin has a company at the center. It has a founder. It has a foundation. Whatever they want to call it, there is a central authority that still runs, maintains, develops. They control the network. It doesn't matter if everyone else can verify or validate on it and all this crap. Like it's controlled by a central authority.
It's
It's not
managed. It's
decentralized.
managed by a company. Yeah, it's a company.
Exactly. In comparison to Bitcoin, when you look at it, yes, there was an initial founder. They have since stepped away from Bitcoin, allegedly. Nobody knows who they are, which is honestly one of the coolest parts about Bitcoin, in my opinion. It's like the 10th wonder of the world because it was discovered by someone nobody can identify. It was just dropped on the world, and everybody just decided, hey, this thing's fucking awesome. Let's run it. Right. And it's been
I mean,
14 years in the making.
I almost think that is symbolic of just how decentralized it is. Like we can't even. I mean, we have a name. It's not a real name, right? Satoshi Nakamoto, but we don't know who he is. We don't know where he is. We don't know if he's alive or dead. But we know that he's not managing Bitcoin or the protocol. It's self-managed. It's completely self-managed. And you think about Ethereum, and I'll butcher the guy's name, but we know his name, right? He's the guy in charge. He's got a team of developers. They can wake up one day and say, "Hey, we're going to switch from proof of work to proof of stake for reasons XYZ." That is shit a management team at a tech company does, and that's what it is. And
100%.
I
They're all
mean,
software companies.
worth mentioning that Ethereum doesn't really like claim to be trying to become a hard money or anything, right? It doesn't claim to be trying to do that. But the problem is that's how it's manifested today. It's manifested in tokens, just like Bitcoin is, right? I
Well,
mean, the technology itself may be cool, but it's presented as a money.
The technology, don't get me wrong, is cool, but why does there need to be money associated with it?
Right.
That's the biggest thing. Like everything, all these cool like Web3 apps, metaverse crap, all this like cool stuff. It's cool technology, but they're not nobody's going to use like this random coin you created. All these things can use an actual hard sound money that's open source, decentralized, you know, permissionless. They can use the Bitcoin token on all of these things, and it's a much better version than anything else. These thousands and thousands of remakes trying to copy or improve upon Bitcoin. They're just they're not improvements. They are creating these things to make
Enrich
more money for
themselves.
themselves. That's it.
Yeah. I mean, that's the only rationale, right? That is the only rationale of why it's presented as a money, why there's tokens issued, is to enrich those who are running the program.
Yeah, and that's I keep saying this. Every part of Bitcoin is so cool. I have so many favorite favorite parts of it, but like the open source aspect of it. So, all these other shit coins, they're incentivized to develop these things because they're making money, right? Bitcoin, there's no company behind, there's no marketing scheme. Like nobody is getting paid to build this stuff, right? Of course, there's companies surrounding Bitcoin that use Bitcoin and things like that, but the core developers that do make improvements, it's very difficult, long drawn out process because it takes consensus from the 51 plus percent of the network, but there's no one paying them. So if you just sit back and think, you know, what is the incentives here? Right. Everyone building on Bitcoin, their incentive is to create a better monetary network, right? They're not getting paid to do so. This is something they want to improve our planet with. Where, any other shit coin, they're making this, yeah, maybe they want to provide some value, but they're looking to fill their pockets. We just saw like I'm pretty sure Ethereum, their foundation just dumped a ton of tokens just recently. And that just it's not a thing with Bitcoin. Like there's no one specifically working on this thing that has control of it, right? There's a lot of different things you can dive into how the open sourceness works, but it's pretty incredible. Like anyone that wants to develop on Bitcoin can. You submit the proposal, everyone has to agree to it. That's a very oversimplification of the process, but go try to, propose something to Ethereum. Like it's not going to happen.
Nope, absolutely not. And that, Alec, I think that ties into, the next point pretty well. Like, what is the importance of open sourceness?
I mean, open source programming really just opens up like, hey, this is something that's free to the world. There's no barrier of entry outside of having a computer and the ability to understand the software code, right? But anyone that wants to come and build on Bitcoin can, right?
Right.
Once they build something cool, it is their job to get people to support it and want to use that thing, right? And most of the projects surrounding Bitcoin, hardware wallets, things like that, are open source as well. It's just the fact that no one's looking to raise money from venture capital, right? They're not taking in money to then go build something to earn a profit back. Everyone is coming to Bitcoin saying, "Hey, I want to build this because I think it's something that's going to better, the money and the planet." They're not receiving, millions and millions of dollars from a VC backed firm to go out and build this crap and then need to go generate a profit for them, right? The incentive is completely switched, right? It's all about incentives.
Absolutely. And in reading some of that article that you just shared, Alec, it gave the example of like in the 90s with the birth of the internet, how a lot of like firms were just rejecting that as a concept and developing their own intranets within the org. And it compared like the progress of how these intranets developed against how the internet developed. And I think we all know how that went, right? When you have an open source situation, just from a technological development standpoint, things are going to progress just at a way higher trajectory than they would within this small private group of people trying to serve a specific self-interest, right?
Yeah. A very simple way to put this is like if you look at open source, like what you mentioned with the internet, intranet, that's a great point. Bitcoin is like email, right? It's a protocol. How many companies out there offer email? Right? They didn't have to buy email. They didn't have to do any of that. Email is something that was invented, a protocol, and then people are able to build upon it, generate companies around it and all that. Bitcoin is the exact same way. It's just a protocol just like, the internet, the email, and there's going to be companies building around it, and that's what, all these wallets and exchanges and everything like that are today. Simplest way to put it.
Love it, dude.
Awesome. Well, those are my thoughts today. Any last words for us today, Jason?
No, man, I think we covered everything really well. I would love to continue talks on, I think the stories are continually evolving, right? Like for, Ethereum switch to proof of stake that happened, I want to say about 6 months ago. Do I have that right? A little longer?
Can tell you.
Couldn't tell you. That's a great answer. Fuck it.
Honey Badger don't give a fuck, dude.
six months, a year. It happened somewhat recently, and then we see all these updates rolling out. But yeah, and then we just see meme coins popping up relentlessly, and we see like groups of people flocking to those meme coins, just trying to get them to 100x so badly. And a few people end up buying Lambos from it, but I think to stay centered on like what the values of what Bitcoin is trying to achieve on a global scale, it's really fun to kind of pit that against it.
100%. Bitcoin's not a get rich quick scheme, guys. Sorry if that's what you're here for. It's not what it is. I mean, Bitcoin has made some amazing gains. Go look at the charts. It's very simple to see as long as you zoom out, right? But Bitcoin is here to be a better form of money, one that's not controlled, one that is open source, decentralized, and it actually requires energy. It has a cost to produce. So this thing's going to continue to grow whether or not you decide to utilize Bitcoin. It's an option to opt out of this crazy system that we're born into where money is created for free. If you don't like that idea, if you don't like seeing, everything inflate, everything in the world, getting more expensive around you, it feels a lot like you're just being stolen from, on the daily basis. Don't have cash sitting in a bank account. It's getting stolen from you by taxes, by inflation. Opt out with Bitcoin, store your value, save it across time and space, be able to transmit it permissionlessly, and that's the goal. That's why we're here.
And also, yeah, and to add to the energy, intensive comment, Alec, like that's a good thing. We,
Oh,
we need to
absolutely.
remember we need to remember that's a good thing. And I say that because one of the first things, to go back to our previous episode when I was talking about our discussion, and I was like, well, what's wrong with Ethereum, man? It's like it's right up there with Bitcoin, and it's 99 point whatever percent more energy efficient. And it's like, yeah, but that makes it easy to produce. That's what we want to move away from. We want to move away from easy money to hard money. Bitcoin is hard money, and it's hard money because one, it's completely fixed in supply, and two, it's fucking hard to produce. It's energy and labor intensive, and that is a good thing. But you read headlines, pro Ethereum headlines, and the way those headlines and those stories spin it is that the move Ethereum made from proof of work to proof of stake is a highly beneficial thing in that they were able to vastly reduce these energy costs, right? Well, that makes it easy money.
Dude,
That makes it easy money.
I could probably make a whole episode about energy usage with Bitcoin versus other consensus mechanisms. Yeah, all that's trash. Greenpeace, Elizabeth Warren, New York Times, whatever they're saying about Bitcoin's energy use and how it is polluting the environment is just it's just stupid. Like, do a little bit of research into how Bitcoin works. I don't know if you saw that. I don't want to drag on this too long, but Pierre Rochard of Riot Blockchain, a mining company, made the funniest video. He like takes a CO2 reader, goes into his mining building, and he's like, "Huh, looks like the CO2 levels are not rising inside the building versus outside." Like
Yeah.
just stupid crap like that. Like
It is funny.
computers don't emit CO2, if anyone didn't know that. So, first of all, mining itself like doesn't emit carbon. So it's the exact same as a data center. It's the exact same as my laptop here. It's the exact same as, your Xbox. So if Bitcoin's bad for the environment, so are all those things. Like,
Yeah, your refrigerator. Yeah.
stop using a refrigerator, stop using a washer and dryer. Like nobody's going to do that. Energy use is good. Every single country you can look at, there's not a single rich company or country, excuse me. There's not a rich country that has a low amount of energy use. If you look at the countries that use the least amount of energy, they're generally the poorest. Energy usage is directly tied to prosperity. So the more energy that we use, the better. And another beautiful thing about Bitcoin is the fact that Bitcoin mining actually requires cheap energy. So it incentivizes people to find wasted cheap energy, whether it's
Mhm.
energy sitting out in the middle of a jungle in Africa. There's a waterfall that you can put a hydro generator on. Like, who's going to use it out there? If there's a waterfall in the middle of nowhere, there's no one around to use the energy from it. Why not mine Bitcoin with it? Right? Like you're finding ways to utilize energy that otherwise wouldn't have been. So that's the end of my rant on energy.
Yeah, absolutely, dude. So I love it, and I know we were trying to wrap up 5 minutes ago, but we could keep going, but we'll wrap up. Just some takeaways here, though. Bitcoin differs from any other crypto in that a entirely fixed supply that just can't be overstated. 21 million, completely fixed release schedule, right? The halvings every 4 years, like these are just properties that only Bitcoin has. They can't be tampered with, and it removes any human subjectivity, any human error, and those are all things you're going to find in proof of stake mechanisms, right? Like our friend Ethereum, we're going to find those things there. We're going to find firms staking a shitload of their money into Ethereum, and suddenly it's very centralized because they have a lot more power in the network to validate transactions than you do, Alec, or that I do with my 32 Ethereums or whatever the minimum is to become a validator, right? They have hundreds or thousands of Ethereums in there. And I mean, it's pretty clear to see how that becomes centralized, despite all the descriptions of decentralization they continue to peddle for themselves. So, Ethereum bad, stay away.
Love it, man. Yeah. Bitcoin is rules without rulers. Everything else has a company, has someone behind it. It's centralized. Cool. Let's wrap this up. Thanks so much, Jason. Great to chat once again. Looking forward to our next episode. Guys, thank you so much for listening to Today I Learned Bitcoin. I hope you had some awesome takeaways, learned a bit about Bitcoin, why it differentiates from everything else in crypto, and what are those, key components that make Bitcoin so amazing and powerful. Keep an eye out for the next episode. Really excited. We're actually going to have a guest on to do a tutorial here very soon. It'll be a little bit more intermediate level, but still something very cool to actually take a look under the hood inside of Bitcoin and understand exactly what's going on with this blockchain thing. So we're excited about it. If you like the episode, please share it. Help us fight these algorithms, get our message out there. Like the show, share it with your friends, comment anything you want to specifically learn about on Bitcoin. We will seek a guest to teach us about it. So, thank you so much once again. Peace out.